Everyone, Ahmet here with Down to Trade. Welcome to another episode of our deep dive into the world of options trading. Once again, we are joined by the trading whiz kid, Varian Cross. Varian, how you doing, buddy?
Doing awesome, man. Glad to be here.
Awesome, man. So look, today we're diving into a critical concept every trader should master, and that's using support and demand zones. Now, Varian, why are these zones so important?
Man, support and demand zones aren't just lines on a chart. They represent key price levels where the market often sees significant activity. Understanding these can be the difference between a profitable trade and a loss.
I honestly, I couldn't say it any better than that. So I guess let's break it down for our viewers, starting with some of the basics. Now, support zones or support levels are prices where we typically see buying interest that's strong enough to sustain the price or even push it higher, right? Now, demand zones are similar, but kind of on the flip side. There are areas where buyers historically come in strong, showing a high demand for whatever stock we're looking at, hence pushing the price upward. And it's where the market supports the price from falling further.
Yeah, absolutely. And I mean, these zones form through various market actions reflecting that, the psychology of buyers and sellers. Remember, the force that drives price movement in any market is when supply and demand become imbalanced. So having a basic understanding of the law of supply and demand is very crucial in what we do.
100%. So as you all can kind of remember from economics in high school, right? When demand increases, price will tend to increase. And conversely, when supply goes up, prices tend to fall. Another way to think of it is when demand is greater than supply, prices will go up. And when supply is greater than demand, we typically see prices going down. Now, both of these scenarios are indicators of an imbalanced market. And as you said, that imbalance in the market is what really is driving price to move. So our goal as traders is to find these imbalances so we can take advantage of that upcoming price movement. So now let's kind of move forward by identifying these zones, because I really think identifying these zones really can be key to our strategy, right?
Oh yeah, absolutely. In identifying these zones involves looking for areas, with a noticeable reaction in price. But there are common mistakes like confusing a small price hiccup with a true zone.
Exactly. So tell you what, let's look at a couple examples to see how we might actually draw these zones on our chart. First, we're going to look at a demand zone. Now, again, demand zones are areas where demand is higher than supply, and we would look to possibly enter bullish at the imbalance and take profit at the supply, right? Now, I would say step one is to look at the chart from right to left, because we really don't want to find any used areas of price imbalance, right? Once they're used, then that area kind of dissipates. You can kind of see what I'm talking about a little bit later on, but understand when we look at the chart to find areas of supply and demand or supply and demand zones, we look at the chart from right to left. And next, we have to understand that when looking at demand zones specifically, there are two different types of demand zones that we look for. One is called rally-based rally, and the other is called drop-based rally. Now, rally-based rally, we'll take a look at that one first. Now, understand that because the market rallied, then based, and then rallied again, the market tends to pull back to that origin area of the imbalance to pick up remaining orders for another run higher. So this is exactly what I mean. At first, we have that rally, base, rally. And notice I drew my base or my demand zone based on this one, what we call a basing candle. I typically draw them from the bottom wick to the top of the body for a demand zone. If it's a supply zone, I do from the top wick to the body. But again, if we're just looking at demand zones, I would draw from the bottom wick to the top of the body. And then we drew that because we saw a rally, a basing candle, and then another rally. Now, this is a possible area or a possible pocket of demand. So what we do is we wait for price to get back into that pocket, and that basing area is suggesting that there is a surplus of demand here since price was able to rally out of that balanced area. Now, understand everything else on that chart is basically noise because we're really only focusing on finding that imbalance point. Here was the initial possible imbalance point where the market participants are not agreeing on the price. And then our goal is to enter in that demand zone bullish and ride it to the point where the market is back in balance, or where the market participants do agree on price. So this move back into the demand zone is where we expect large buy orders to be waiting to be filled. Now, this is where many new retail traders begin to sell after a large pullback like this. They actually tend to sell there because they expect the market to continue to drop. But big money is actually sitting on the other side of the trade looking to buy up all of those sell orders. And so we as traders, we want to be riding in the wake of the big money, or riding in the wake of the large institutions, financial institutions. And so we are looking for a buy order down here. Now, again, we set this demand zone here weeks ago, but it wasn't filled until this point here. And this is where we look to enter. The next type is very similar, except for one small deviation. And this type is called the drop base rally. Now, the drop base rally works very similar to the rally base rally for several reasons. Again, we look for a drop toward price imbalance right here. And then we look for that basing candle one more time. Again, I draw the basing candle from the bottom wick to the top of the body if I'm drawing a demand zone, and then obviously followed by a rally. Now that is how we draw in our demand zone. And this again suggests a possible demand zone with a pocket of large buy orders that we look to get in on. So here's an example of how these will actually work in action, and how I typically draw them and use them. So again, down here, we had a slight rally, base rally. So I draw my demand zone right here. And again, from the bottom wick to the top of the body. That has not been tested here yet. So no, that will just remain until it's tested at some point in the future. Here we had a rally, base rally. So again, I draw supplies, demand zone. That was tested. And so when we drop into the demand zone and it breaks to the upside, that's a possible entry that we look for. And again, we certainly look for confirmation with other indicators or other signals, but this is a fantastic signal that we look for when we test into that supply zone, or I'm sorry, test into that demand zone and break to the upside. That's a good possible entry for a good bullish run. Once again, here we had a drop base rally. And that drop base rally, I drew in the demand zone. A little bit later on, it was tested again. This green candle breakout to the upside would be a fantastic entry for a bullish position and ride that all the way up. A little bit later, again, we continue this. The theme never really changes. The only thing that changes is which type is it? Is it a rally-based rally or a drop-based rally? Either way, as long as you know how to recognize the two, the strategy is the same. But here's another one. We have another drop. We have a basing candle down here, that small basing candle, and then a huge rally. So we draw on our demand zone. That one has not been tested yet, so we'd keep that there. Here we have another one, a drop basing candle followed by a rally. So we draw in our demand zone. That was later on tested, and once it broke to the upside and closed at the upside, you enter for another bullish run. So this is a basic run for how demand zones work, and understand the exact opposite is actually true about supply zones for the exact same or the exact opposite reasons. But in all sincerity, I think we're running a little bit long, so I'm not going to show you those examples, but just understand that supply zones, I typically draw the supply zones in red, my demand zones in green. Remember, it's all about distinguishing between minor price movements and significant ones. Now, let's move into how we can actually use these supply zones in our trading strategy.
Yeah. So while these zones help in identifying entry and exit points, combining them with other indicators like volume or momentum can really solidify your strategy. And remember, confirmation is key before acting on these zones.
Absolutely. 100%. While support and demand zones can be powerful tools, there are pitfalls. And one common mistake is acting too quickly without waiting for confirmation, or like you said, waiting for that confirmation, or even misidentifying zones altogether. And that's why continuous learning and practice are crucial. And remember, no one becomes a master trader overnight, right? Varian, tell you what, any final tips?
Yeah, I mean, just that, Amit. Practice makes perfect. Start with paper trading if you're new, and always review your trades to learn from them. And as we kind of just said a few times, but I just want to reiterate, um, that these are areas of interest. You don't just buy and you don't just sell because you've entered one of these zones. You must wait for confirmation before you act.
I love it. I love it. All right, man. Let's move on to the fun stuff. So, Varian, once again, I heard from the grapevine that you have another killer backtest for us today. Care to
I
share us what
do.
you're looking at?
So once again, back here at Options Omega, um, man, I mean, this platform is just awesome with all the different things that you can test out and play with when it comes to, testing out different option strategies. So, this one, the past couple that we've really looked at have been day trade based. Here's one that is technically a potential for a swing trade, even though based on results, it tends to last less than a day. But here, once again, since our favorite is playing the SPX, that's primarily what we do. Here is a Monday morning iron condor on the SPX.
Okay.
So this one's getting a little more complicated than a lot of the ones that I've shown in the past. Those have been a bit more basic, but this is a bit more advanced of a strategy. What we're doing is we are opening this trade at 9:35 a.m. every Monday morning. And the one other requirement is the VIX has to be a minimum of a 10.
Okay.
And what we're doing is we are actually opening up a calendar iron condor, basically, for 2 days to expiration. We are selling the 50 delta put and the 50 delta call.
Okay.
And then at a 4 day to expiration, we are buying at 30 wide the put.
Gotcha. Okay. So, and this is all opened up at one time. So the short legs are going to be at the money 2 days to expiration.
Yep.
The long legs are for the put is going to be 30 points lower, and for the call is going to be 25 points higher. And those are both going to be 4 days to expiration. That's interesting. Okay. I like
So
it.
then what we're doing is setting a profit target of 25%. So we want to capture 25% premium on that, and a stop loss of 175%.
Okay.
And all trades are exited at 1 day to expiration by the close of day.
So in other words, on Tuesday, by close of day, you're closing up shop.
Yep,
You're closing all four legs.
correct.
Okay. So you enter at 9:35 on Monday morning, Tuesday just before close of business, you're closing up shop no matter what. And
That's
obviously,
right.
if you took profit, you took profit. You took a loss, you took a loss. If you take a loss, are you re-entering?
No,
Okay.
nope. This is just a one-time Monday morning trade. And as you can see,
Yeah,
89.5% win rate on this.
I love it.
And you can see the date that I actually tested when I tested this strategy out was back on February 4th is what that's dated. So I was like, well, let's make sure we update this for the past 2 years and run it again to see how our numbers look coming
Right.
up to our current time frame. And still at an 89.5% win rate.
Wow.
So you can see the average winner is 180. The average
Right.
loser is 466. The max winner was at 725 and the max loser was at 1255. So as always, when selling credit like this, your chances for loss are generally bigger, especially since we have that 175% stop loss.
Right.
But when you look at, I mean, it doesn't look much better than that. I mean, that is a nice, consistent, steady climb.
Absolutely. Well, so looking at the expected return, so the expected return is 112, and this is you're only doing this with one contract, right?
Yeah, this is all I always do these just
I
based
know.
on one contract for just so people have a base idea of what they
Right.
did if they just attempted this with one contract at a time, because that's a size that most people can afford to do.
Okay, so your risk reward ratio is about 2.5, give or take. Honestly, your expected return is 100. I'm sorry, $112, give or take, and that's again only with one contract. That's fantastic. Um, I'm this actually might be one of your better expected returns that I've seen.
Yeah, yeah, this
That win
one
rate is killing it.
definitely an interesting one, but like I
Absolutely.
said, this gets a little, a little more in the weeds when it comes to options strategies. We're now not just doing a regular iron condor or
Right.
anything like that. We're adding that whole calendar aspect to it of different expirations, and so definitely something you want to be very familiar with options to attempt this type of strategy, because you want to make sure you understand exactly what it is that you're doing.
Look, 100% agree. And here's the truth. If anybody does have any questions, if anybody needs any confirmation on how to actually take this trade, definitely hit us up. Look, our goal is to try to help and educate as many people as we possibly can. So definitely hit us up, leave us comments, or better yet, visit us over at downtotrade.com. But yeah, I can understand why a newer trader might be a little bit, let's just call it this might be a little bit of a confusing type trade, but as you know, once you do this a couple times, once you practice the mechanics of entering and exiting this trade, it's very simple. It's extremely simple. And this would be a very simple trade to set up as a template in Thinkorswim, would it not?
Absolutely.
So for those of you who don't know what I'm talking about when I say template, Thinkorswim has it's a very powerful platform, but it has a functionality where you can actually build order templates so that you don't have to build all four legs individually. Um, and you can actually mitigate the possibility of messing up the order, because every time you build an order from scratch, you run the risk of possibly messing up the order. Whereas if you build it as a template, and maybe that's something you and I will do in the future, is do a video on how to build this order as a template. And once you build it as a template, it's very simple to deploy. It's 2 or 3 clicks. That's it.
Absolutely.
Yeah, I like this one, man. That's fantastic. And obviously that that P&L graph is looking fantastic.
Yeah, yeah, it looks very good. But like, and the thing is average days in trade is only about half a day.
Right.
Some of them do go overnight though on occasion,
Hmm.
but
So this would be one that you'd be running in the swing trade room, because it does have the possibility of running overnight. Correct?
exactly.
Okay,
That's
so
right.
for those down to trade members in the swing trade room, look for those alerts. If I don't know if Varian's going to be running it anytime soon, or if he's going to continue to back test it or back trade it. But yeah, look for alerts. That'll be fun. I'm looking forward to this alert.
Uh-huh.
All right, man. Was there anything else about the strategy you wanted to talk about?
No, that was it. That's all the context of it.
Awesome, man. Well, once again, as always, great job with the backtest lab. Um, we're always excited to see and try out what exciting strategies you got, on board for us. So thank you again, Varian.
Yep,
Um,
absolutely.
and as always, for the rest of you, if you'd like to learn more, or if you'd like to see how we use these strategies every day in our day trade room and our swing trade rooms, I sincerely invite you to try out our membership for free. Just go to downtotrade.com. That's down the number 2 trade.com. You definitely don't want to miss out on those promotions, because they're not going to be here for much longer. And again, just go to downtotrade.com. Now, if you like this content, do us a big favor, subscribe to our channel, and don't forget to smash that like button. We love hearing your questions and thoughts. So please leave us a bunch of comments down below. But other than that, thanks for tuning in, everyone. That's going to be it for me. Varian, do you have anything else?
No, that is it.
All right. Well, again, everybody, until next time, this is Ahmet and Varian reminding you to learn it, trade it, and profit. That's going to be it. Take care, everybody. Happy trading.